Hello and welcome to Charting the Markets on Monday, the 3rd of July 2023. We have nothing much on data-wise today, but we had a very positive end of the quarter, end of the month last Friday when equity markets rallied on solid US data and also slowing US inflationary data with the Fed's preferred inflation gauge, the PCE inflation index basically coming in weaker than had previously been expected. So on that risk-on sentiment, equity markets rallied all over the globe, and we saw follow-through of that happening earlier this morning in Asian markets. And also, if you look at the FTSE 100, here we can see that overnight we tested the red line here, the 200-day simple moving average, which actually acted as resistance at 7,564 on this daily financial bet. So what we're seeing here is relatively low volatility trading, which isn't surprising because tomorrow, because of the 4th of July holiday in the United States, it is a public holiday, and therefore quite a few traders have probably taken their day off today in New York and Chicago. So probably not much volume going through equity markets over the next couple of days or so. Now, from a technical perspective, what we've seen so far with the FTSE 100 is a bounce off the 7,401 low on this daily financial bet. That is to say the June low, which was made marginally below the May low here at 7,433. And this is our key support area now. Provided it holds, we could have a retest of the April to June downtrend line, now to July downtrend line, which currently can be seen at 7,635. But for this to happen, we would have to take out the red line here, the 200-day simply moving average, on a daily chart closing basis. So what I would like to see for the bulls to be back in control for the FTSE 100 is a rise on a daily chart closing basis above 7,564. Hello and welcome to Charting the Markets on Monday, the 3rd of July 2023. We have nothing much on data-wise today, but we had a very positive end of the quarter, end of the month last Friday when equity markets rallied on solid US data and also slowing US inflationary data with the Fed's preferred inflation gauge, the PCE inflation index basically coming in weaker than had previously been expected. So on that risk-on sentiment, equity markets rallied all over the globe, and we saw follow-through of that happening earlier this morning in Asian markets. And also, if you look at the FTSE 100, here we can see that overnight we tested the red line here, the 200-day simple moving average, which actually acted as resistance at 7,564 on this daily financial bet. So what we're seeing here is relatively low volatility trading, which isn't surprising because tomorrow, because of the 4th of July holiday in the United States, it is a public holiday, and therefore quite a few traders have probably taken their day off today in New York and Chicago. So probably not much volume going through equity markets over the next couple of days or so. Now, from a technical perspective, what we've seen so far with the FTSE 100 is a bounce off the 7,401 low on this daily financial bed. That is to say the June low, which was made marginally below the May low here at 7,433. And this is our key support area now. Provided it holds, we could have a retest of the April to June downtrend line, now to July downtrend line, which currently can be seen at 7,635. But for this to happen, we would have to take out the red line here, the 200-day simply moving average, on a daily chart closing basis. So what I would like to see for the bulls to be back in control for the FTSE 100 is a rise on a daily chart closing basis above 7,564, in which case we could head back up towards 7,635. But even then, we still have a plethora of resistance here. As you can see, the mid-May low and all the highs seen since late May, which between 7,655 and 7,688 make up this major resistance area, which is unlikely to be breached anytime soon. Moving on to the German market, what we saw here in the DAX 40 is a sell-off last week, but then, and in the week before, what happened is that on that better than expected US data, and also inflationary pressures in Europe coming off, even though core inflation is still stubbornly high, the DAX ended the week, quarter, and month on a very positive footing. As you can see here, very sharp ascent we saw back on Friday, and we see some follow through with not very much volume today. So from a technical perspective, the next upside target or potential technical resistance 16,333. That's the high seen back in mid-May, and support comes in between the late May and early June highs between 16,115 and 16,080 on this daily financial bed. But short-term, further upside looks to be in store for this currency pair, simply because of the strong momentum we saw to the upside. And for the bears to be back in control, what we would need to see something like what happened back here in mid-June, when we had a bearish engulfing pattern, or some sort of short low volatility day followed by another negative day, as we saw back in May. And right now, that doesn't seem to be happening just yet. But as I said before, with US market shuts tomorrow, it's quite possible that we'll see a low volatility range trading day today, and then we'll have to see what happens tomorrow and on Wednesday when the US gets back. With regards to the US markets, here you can see the S&P 500, and what has happened here is that we have made a new multi-month high. And if I zoom out onto the weekly chart, you can see here that we're trading now at levels last seen back in April of 2022. And the next upside target from a technical perspective is the April 2022 high, the mid-April high at 4,513 on this daily financial bed. So that's the next upside target for the S&P 500. And we'll have to see whether further upside will take us there, as I said, today, when trading volumes will be pretty low ahead of tomorrow's 4th of July holiday. For a top to be formed here, what we would need to see is basically a false breakout to the upside, a false break above the June highs, and then a reversal take us not just through the May to July uptrend line, which currently can be seen around 4,368, but also, and far more importantly, the late June low at 4,328. If that were to be fallen through, in that case, a medium-term top would be formed. But right now, it is actually looking more likely that further upside is in store with regards to the S&P 500. The US dollar has regained some lost ground at the end of last week on the back of solid US data, and also inflationary pressure in the US basically diminishing with the PCE inflation gauge on Friday. Now, ahead of this week's non-farm payrolls on Friday, and also a plethora of not just European but also US services and manufacturing PMI data out on Thursday, it'll be interesting to see what the financial markets will be doing going forward, because for the time being, the Fed Fed is still expected to hike its rates 2 more times this year, and basically the US dollar is benefiting from this view. And as we can see here, the inverse, that's euro dollar, is actually coming off. We had a bounce back last Friday into month's end and ended the month and I believe the week also on a positive note. But this morning we are retesting the orange line here, the 55-day simple moving average at 108.80. And below that, we've got this really good support area between the 23rd of June and also the 30th of June lows between 108.45 and 35. And provided that holds, we could then perhaps retest the 110 region as we did back in June. But if we were to slip today further and over the next few days actually fall through 108.35 on a daily chart closing basis, in that case it would mean that we have formed some sort of top here again, and that we would be drifting back down again towards the March to July uptrend line, as we can see here, and this currently can be seen around the 106.90 area. So these are the key levels to watch: 108.45.35 on the downside, and for the bulls to be back in control, ideally what we would like to see is the last reaction high to be taken out. That's the 27th of June high at 109.76. But right now it looks as if we have some sideways trading going on here with a slight negative bias for the euro against the US dollar. And the picture is quite similar with regards to cable, the British pound against the US dollar. As you can see here, we bounced off on Friday as well. But on this morning's stronger US dollar, the British pound is again coming off against the US dollar, because the US dollar is appreciating, the currency pair slipping. And it interestingly enough failed at this 2-week or 3-week resistance line earlier this morning at 127.07, and is heading back down again towards last week's low, 125.91. Now, if that were to be fallen through, we have pretty good support also going back to this year's uptrend line, which currently can be seen around 125.45, and also the orange line here, the 55-day simple moving average at 125.44. So these are potential support areas in case of 125.91 being fallen through. But if we were to manage instead to revert further up to the upside and follow on from Friday's high and its rise to 127.27, if we were to take that level out, then it is quite likely that this recent 2-week decline has just been a consolidation phase within a longer term uptrend, in which case the 128.48 mid-June high could be retested. Another interesting currency pair to look at is the Japanese yen, because it continues to weaken, and the Bank of Japan is becoming more and more vocal with regards to potential intervention. So that needs to be watched for those traders who basically are buying currencies against the yen, such as the dollar here, for example, against the yen. And we can see dollar yen last Friday rose to 145 yen and 7 sen, and then did come off a little bit. But this morning, you can see we're heading back up again. And we're currently trading at levels last seen back in November of 2022. And we have as our next upside target the well, actually, we've already taken that out, sorry. So the next upside target would be the 145 yen area, and then followed by the psychological 150 yen area. So you can see here we are now starting to rise for the 4th consecutive week in a row on dollar yen. We are in a clearly defined bullish trend, but we need to watch out for possible intervention by the Bank of Japan trying to stop the yen depreciating further. And you may remember around current levels, we did have some intervention last year with regards to dollar yen. So interesting to watch this in the next few days. Commodity markets have been interesting of late, and as of the 1st of July, that is to say Saturday, the OPEC Plus, for example, has, well, actually Saudi Arabia, I'm sorry, Saudi Arabia has cut its output by a million barrels a day on a voluntary basis, and thus is being even more conservative with regards to its output than OPEC Plus is. And on this tighter supply, you can see here over the last 4 days, we've had the price of crude oil heading back up again with regards to WTI and currently testing this resistance line going back to April of this year. And this currently comes in at $71.22. And we are right now, as we speak, trying to break through that and heading towards the orange line, the 55-day simple moving average at $72.10. And above that, we've also got the late June high at $70.70. So further upside looks to be likely with regards to the price of crude oil. As you can see here, it has once again last week bounced off key support around the $67 area, which held back in late May and also in June. And once again, we're heading towards the top of this sideways trading range we've been in since early May. And that is to say, taking us back towards the $73 to $74.70 area, perhaps in the next few weeks and months. We'll have to see whether we can eventually break out of that sideways trading range. But right now, it looks as if we are going to try to head at least towards the top of that sideways trading range over the next few days and weeks. The price of gold, however, doesn't look so good. I mean, the price of gold is currently flirting with a 61.8 Fibonacci retracement of the entire March to April advance, as we can see here, from $1,805 per troy ounce to $2,082 per troy ounce on this daily financial bet. And we have since remained below this May to July downtrend line. And as you can see here, it looks as if further weakness might actually take the price of gold to below last week's low, which was made at $1,893 per troy ounce, in which case we would be heading back down again towards the red line here, the 200-day simple moving average at $1,861. For the bulls to be back in control, however, we would have to see a bullish reversal here, and that would need to take us not just through this May to July downtrend line, but also above the last reaction high. That's to say the 23rd of June high at $1,937. So only then could we expect the price of gold to be heading back up again. But right now, the odds seem to be saying that basically because we are in a downtrend, further downside is in store. Now, another commodity I'd like to look at is orange juice. Now, orange juice had risen very sharply over the last few weeks and months on a bad crop in Florida. I think the worst in since the 1920s in the US, and also Brazil having issues with its crop, and therefore the supply of oranges being curtailed, and that has led to these rises we saw in the price of orange juice this year. As you can see here, it all kicked off back in February, and we rose to around $2.87. But what has happened since is that from that $2.87 high seen back in May, we've come off very swiftly, then traded sideways throughout the month of June, and are currently testing this year's uptrend line. And it may well hold, but if it were to be broken through, and that means also if we were to fall through last week's low at $2.53 or so, then for me, technically, that would mean that the previous decline here is likely to continue after the sideways consolidation range. And that would mean we could head back down again towards the May low, $2.38, and also perhaps even towards the red line in the 200-day simple moving average at around $2.27.5. So further downside likely to be seen with regards to orange juice, provided we stay below the last reaction high. That is to say the 26th of June high at $2.65 and 73 here on this daily financial bet. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is AxelR_IG.